go forward and talk about the quarter tak. We're looking at the auto sector, which is likely to report a mixed set of earnings in the second quarter. We do have the volumes. So two-wheeler volumes have seen a healthy rise of about a 13%, where the volumes of commercial vehicles have fallen 19%. Sudarshan joins in to talk more about the auto sector's performance in the quarter gone by. More importantly, what is it that the street should expect? Sudarshan.
Good morning, Mangalam. So for the quarter ending September 2024, auto companies are seen reporting a mixed set of earnings, and this on the back of varying performance across the segments of wholesale volume front. Two-wheelers that are seen performing better than other segments have seen its wholesale volumes rise by 13%, led by strong demand in both rural and urban areas. For passenger vehicles, volumes have fallen 2%, and for tractors, it was flat. And the sharp fall was witnessed in commercial vehicles. CV volumes in Q2 have sharp decline that was 19%. And that was mainly due to high base in cargo vehicles. Now let's talk about the segment that is expected to post a healthy set of growth. The two-wheeler companies are seen reporting top-line growth in the range of 8 to 23% and EBITDA in the range of 10 to 30%, with Bajaj Auto and TVS Motor leading the pack, while Eicher is likely to be the biggest underperformer. In the passenger vehicle segment, M&M is expected to lead the growth led by the auto segment, and in contrast, Maruti Suzuki is likely to face challenges with higher discounts eating into gains from its high-margin CNG vehicles. For Tata Motors, weak operating leverage and struggles related to plant shutdown and demand concern at Jaguar Land Rover may weigh on the earnings, and the pure CV play Ashok Leyland is seen reporting a decline in revenue and EBITDA impacted by weak volumes. And the tyre sector is set to experience a slowdown with rising input costs and subdued demand. In the contrast, auto ancillary companies, especially Samvardhana Motherson, is expected to post a healthy growth due to both inorganic and organic growth. Bharat Forge is seen benefiting from domestic industrial demand and the PV segment. And for tyre companies, revenue is seen growing at a minor pace, while on the EBITDA front, we may see a sharp decline. Now let's shift focus to valuations. It remains diverse across the sector. Among two-wheelers, TVS Motor holds the highest forward PE, followed by Bajaj and Eicher. In the four-wheeler segment, M&M is now the most expensive stock, while Tata Motors remains the cheapest. And in the auto ancillary pack, Bharat Forge continues to trade at expensive valuations. Lastly, talking about the sectoral outlook, festive season is crucial for the passenger vehicle segment to achieve the targeted 4% year-on-year growth for FY25. For two-wheelers, recovery is expected to continue, driven by a favorable monsoon, improving farm income, and a low base effect. CV demand, that is commercial vehicle demand, particularly in the medium and heavy commercial vehicle segment, is projected to recover in H2 FY25 as infrastructure spending picks up post-election, that is state elections. So overall, it's expected to be a mixed quarter, with two-wheeler segment is expected to do better, while CV segment may report a weak set of earnings. In passenger vehicle segment, the healthy growth trend for M&M may continue, while Maruti and Tata Motors are likely to report a subdued set of earnings. That's for the auto sector for Q2 FY25.
All right, Sudarshan, thanks a lot for that. So that sets the expectations for the second quarter FY25. The two-wheelers likely to do a lot better in that as well. Eicher Motors may have a bit of a rough ride in terms of underperformance coming in. For the passenger vehicles, we are expecting some outperformance coming in from M&M itself. You've seen that in the stock price performance as well. If you look at Hero MotoCorp, the stock has seen about a 34-35% rally this year itself. Today has moved to the high point of trade. That's about Eicher Motors. But I'm looking at Hero MotoCorp over the last 12 months or so. It's an 80% up move that we've seen. Bajaj Auto as well over the last 12 months has seen a rally of over 135%. So we'll continue this discussion forward. Staying with the auto space itself, we do have with us Vinkesh Gulati, who's the executive member of the Federation of Automotive Dealers Associations, FADA as we know it. He's also the managing director of Mango Motors, joining in to discuss how the festive season is shaping up. And alongside that, we also have Venkat, who's joining in. Mr. Gulati, first up, the question is about the festive season. Of course, the last 20-25 days would have been impacted by the Shraddh period. But now as we look ahead into the festive season, if you could give us what is the kind of expected growth in passenger vehicles and in two-wheelers for the next couple of months?
So thanks for having me. See, very frankly, we have already crossed the first leg of the festive, and it's looking very, very positive. We were thinking of a good growth overall festive, which means by Diwali end, but how the Navratri has come in is a clear indication. We are already growing at a good pace in the two-wheeler segment. It's around 12% up if I compare last Navratri to this Navratri, the similar days. And similarly, not that great, but the passenger vehicle is also showing a good growth. It's around 4-5%, which we are seeing on an overall same period. The three-wheeler and the commercial segment is also growing. So overall, except for tractor, which is not showing that growth, it's actually in degrowth. Overall, the auto industry has grown by 10% if I compare 9 days last year, which was 15th October to 24th October, till 3rd October to 12th October 24 this time. So seeing the overall growth, we are still positive that by when the Diwali ends, you can take around 10th of Diwali is on 1st, so we can take on till 10th of November. We'll see a major growth, and the auto industry will see the expected growth of 10% plus in the whole. Obviously, two-wheeler will lead with a bigger growth.
All right, Mr. Gulati, just hold that thought, detailing about how, the start to the season has been. Give us a few more details as well. What are the inventory levels now, if you compare it normally with regard to a festive season? Are they lower? And, if you could give us some rough numbers.
So practically, see, we entered inventory at the festive at a very high inventory. No doubt, the purpose was because we were expecting a good retail. Obviously, the retail wouldn't shift us back to that, you can say the genuine or the reasonable inventory, what as FADA we always speak about, which is 21 to 25 days. But this 80-85 days, what we have seen, we should come down to around 55 to 60 days by the end of October end, and we are expecting by November and it should come down below 50, seeing how the growth is happening, because November also is a good month for the north because the marriage season is going on. And then we'll expect a good month in December also. So this quarter is overall thinking of only growth, and the kind of inventory we have, which is very, very disturbing today. But seeing the current growth, it may taper off in coming months.
Right. Just hold on to that thought, Mr. Gulati. We also have Venkat Goli, who's the chairman, AP State FADA and managing director of Mango Motors, joining in. Mr. Goli, what exactly are the inventory levels that all the participants are sitting on right now? How does that compare to the last 12-month average, so to say?
It's the same as Mr. Gulati has said, that, we are in the range of about 60-65 days earlier, or even 90 days in certain models and certain manufacturers, which we are hoping to drastically come down with the festive being really good. And the Navaratras, which is especially the most auspicious period, looks pretty positive. And as Mr. Gulati mentioned, it's about the two-wheelers actually taking up the positive sphere of sales. We are looking forward for a good festive.
Okay, if you could give us some more insights, sir, if you could tell us at your dealership, Mr. Venkat, if you could give us a couple of brands where you're seeing increased traction, some kind of numbers in terms of growth heading into the festive season in comparison to last year. Some insights will be useful.
Yeah, I deal with Hyundai on the four-wheeler side and Hero two-wheelers. So both look positive for us, in particular. And in Hyundai, you know that with the kind of good offers which they have rolled out this month, the festive schemes have really boosted up the demand, and we have a good traction for Exter, Creta, Venue, which are supposed to be the good volume churners for Hyundai. And Hero in the commuter segment, I think pretty much all the models have been doing well, especially if you compare Glamour, which is supposed to be the breadwinner for Hero Motocorp in south of India, and especially in the state of Andhra Pradesh and Telangana. It seems to be having a good traction now and doing really well. So we are hoping this traction continues until Diwali.
Okay, we'll see how the traction continues until Diwali and beyond that, in particular for Hyundai, as well as the IPO opens tomorrow. But more on that in another day. Thank you so much, Venkat, as well as Mr. Gulati, for joining in and giving us a bit of a peek into what the festive season looks like so far. We leave you with the promise that you join us post-festive season to give us a sense of how those inventory levels have come down as well, and how demand has panned out too in the auto space itself. Before we take a short break, just pull up a